Welcome to Atlanta's Commercial Real Estate Show, brought to you by Bull Realty, the show for property owners and business leaders. Host Michael Bull brings you market analysis, advice, and opportunities around Atlanta.
All right, let's talk about the sweetheart sector, multifamily in this sector. And thanks for joining us, guys, here at Atlanta Leaders Group, on the radio stations, on iTunes, YouTube, and the show website, AtlantaCREshow.com. Well, the multifamily market, I mean, that has seen explosive growth. The rental rate growth, occupancy growth in multifamily is every quarter that I talk to the multifamily experts that track it every quarter, they're just blown away. They say, well, we didn't expect it to be this strong. We didn't expect it to be this strong. And this continues to build. It's just really been awesome. But now we're starting to see a little bit of drop off. We're starting to see a little bit of leveling of the growth. So where we've seen really strong rent growth is starting to level down. We're still seeing rent growth. We're still seeing occupancy gains. It's just starting to level off a little bit. You'll see here's the growth in rental rates. Look at that. It's just been amazing. So for you guys that invested in multifamily, 3 or 4 years ago, you're golden, right? You've had a nice ride. Rental rates have really climbed. And here's what I was talking about. You're starting to see rent growth slow down. Where we had these astronomical rent growth numbers, look at this, 6%, 8%, up to 9%. If I was pro forming a building and told you that's the rent growth you were going to have, you'd say, yeah, right, Michael. It's not going to happen. Well, now we're starting to see it drop down, but we're still seeing very strong rental growth right now. We're still seeing strong growth. It's just starting to level off. Absorption, if you like that, it's in the chart. Got to watch new supply. And you guys that are love real estate, check out the charts. We'll have them online if you're listening on the radio station, and they're in the handouts if you're here. New supplies has really been big. And I think the question about new supply that people tend to ask is, are we overbuilding? There's been a lot of new supply in Midtown and Buckhead, even some of the suburban markets. And it's seemingly that it is slowing down itself. I mean, it's harder to get a construction loan, as most of you know, than it ever was. And multifamily has always been the sweetheart sector for getting financing because of Fannie and Freddie. It's always been a favored market for getting financing. Well, it's getting tougher to get these loans to build new apartments, and because of the numbers starting to slack off. So some of the folks who like to watch the cycles, right? You're watching the cycles. Some of the investors I work with, I call them when the market's doing really well, and they go, Michael, you're so cute, thanks for calling me, but you only buy in the low cycles, all right? And we're in a big recovery cycle. And some of the folks that watch the cycles thinking that for multifamily and industrial, that we're kind of at the top, that it could start going down soon, that we may still be on the way up for the other sectors. Really, it's going to be dependent on the size project you're talking about in the area, right? But we're certainly in good times right now. Yeah, I think for multifamily, a lot of the multifamily developers are seeing that they're actually getting some baby boomer tenants, right? I think that it's kind of changed. Remember back in the day when somebody said that you say, hey, where do you live? And they say, well, I rent an apartment, and you felt sorry for them, right? And now that somebody says they rent an apartment, you go, you lucky dog. You're not doing anything. What are you doing at the lake this weekend? So I think the stigma is gone. I think more baby boomers are really going to continue to want to rent. So I think that's really helping the market. And the other things that are helping the market is kind of the lifestyle change. Kids are getting married later, children later. They've seen some of their parents have issues with their home values. The stigma is gone. So I think the multifamily market is just strong. If you look at the cap rates, they've just been amazingly low. This is an average right now in Atlanta at 6.08. This is for all property types. But if you have a Class A property, it's probably going to be closer down to 4 if it's a really nice property. It's just amazing right now, the demand that we have. And then what are cap rates going to do moving forward? We're going to talk about that in a minute for all sectors. Here's some recent sales. Let's take a look. Smyrna, Class B at a 6.6 for a Class B, all right, on a cap rate. And those of you that are not in commercial real estate, not used to the term cap rate, it's also your cash on cash return in your first year if you paid all cash, all right, with no leverage. So these are some pretty strong prices. Peachtree Corners, a deal at 6.5 cap. Alpharetta, 5 cap for 264 units. So what's going to happen with multifamily moving forward? I think we're going to still have growth in rents and occupancy. It's just going to slow down. It's going to be more select markets where people are building. Rising interest rates, I think they're going to help the apartment market. We're expected to see some interest rate hikes. I think it's going to continue to help multifamily. If it's harder for people to buy their first home, they may rent longer. So I think that could continue to strengthen the multifamily market. And it's something I don't hear a lot about. So that's just, I'm the only one with that opinion, I guess. We talked about millennials getting married later. We have college debt issues and lifestyle changes impacting multifamily.
Thanks to our presenting sponsor, Bull Realty, and to all of our sponsors linked below. For more Atlanta forecasts, advice, and opportunities, subscribe on YouTube, iTunes, Google Play, and AtlantaCommercialRealEstateShow.com. And be sure to connect, comment, and share on your favorite social media sites.